Welcome back. Well, it is Housing Week here at Fox Business all week, where we are analyzing the outlook for real estate in 2026, what it means for rebuilding the American dream. Now, the numbers tell a challenging story. The U.S. is facing a shortage of roughly 4 million homes. That has sent prices higher. The National Association of Realtors reporting the average sale price for existing homes hovered at around $400,000 last year. Even as the price of some new homes in select markets came in actually lower than existing properties. Current mortgage rates this morning slightly higher this month at 6.11% for a 30-year fixed rate mortgage and 5.5% for a 15-year fixed. That is the state of mortgage rates. Joining us now with a look at commercial real estate is the chairman of global brokerage at Cushman and Wakefield, Bruce Mosler. Bruce, great to have you. And of course, your focus is commercial real estate. What can you tell us about commercial right now in terms of this market?
Well, it's a good news story. Just to put it in perspective, last year total demand was 39 million feet. That's the best we had post-COVID. In fact, best we've had in 2 decades. Through year to date, we have 5.8 million of take-up. That's 32% ahead of last year. What that says is that we are continuing to see corporates expand. Growth continues to be in a city like New York. New York stands alone in this regard. There are other gateways to cities that are seeing recoveries, but New York right now is the place to be to scale your business.
That's terrific. Well, let me ask you about the state of commercial real estate in terms of what executives want in these new buildings as they start construction. What specifics can you tell us about in terms of commercial real estate and buildings that executives want to see there as a must-have in today's build-out?
So it's the perfect question. People have come back to work. We've seen that. CEOs demand 5 days a week. They want to come back to a different environment. So the winners in this are the Class A trophy properties that have invested in amenities, collaboration space, meeting spaces. Every building is now curated. F&B is a big part of it. So they want their people in the building 24/7, live, work, play. And that is what's driving people back. It's to a new environment, and we'll continue to see that. This bifurcation is going to continue if you've invested, and new development as well, air, light, green space. These are things that now the workers demand.
Yeah, and of course, one of the stars of that story is the new J.P. Morgan building, right?
100%.
In New York City. What do they pay? $3-4 billion for that? And J.P. Morgan says the market is strong from a capital and a fundamental standpoint with more transactions on the horizon. What does that building tell us? Are you seeing that as something of a precedent, or is that sort of a one-off?
It is not a one-off. J.P. Morgan realized very early that the key to retention and attraction of the workforce is the amenitization of the property. They built that building inside out. It spurned redevelopment in the Grand Central area. So, for instance, you're seeing other assets like 343 Madison go up. All of those buildings are incorporating this in highly amenitized properties. They're all focused on the fact that every CEO makes a decision now based on their labor. And to attract that, if you will, new generation of worker, they have to have a building that is highly, highly amenitized, even on the hospitality level.
Yeah, I know that building is absolutely gorgeous. But look, it's interesting to hear you say all of this, even in the face of what we're seeing on the residential side. And New York City Mayor Zohran Mamdani threatening to raise property taxes by more than 9%, 9.5%. He's got to fill holes in this $127 billion budget that he wants if the city's rainy day fund is not used, Bruce. How do you compare all of this to what's going on in the city and in high tax cities across the country?
Yeah. So, look, I think what you're pointing to is there is a break point here. Businesses will pay a premium to be in New York. There's no question about that. They are paying a premium. How much of a premium depends upon just how much you raise these taxes, and I think we have to be very, very careful here. By the way, in raising the taxes, you're raising the taxes not just on the 1%, not just on corporates, but you're doing it across the board. So my word here is to be cautious, because right now we're in a very good place. I just talked to you about demand. I can tell you this. Not only have we seen demand increase, but rents have spiked. That's a very good thing. Number one issue, I think, go forward, Maria, is going to be housing. We have to have affordable housing. New York has a 1.4% vacancy. That's not going to do it to retain that workforce of the future. It's not going to be built by the city, in my humble opinion. We need a public-private partnership. We need to let the developers who know how to build. and they will do so if we incent them.
Yeah, and I think, Lindsay Bell, jump in here. You've got a president in the White House who understands all of this, as he was a builder before he went into politics. Your thoughts? Jump in.
Yeah, no, I think that just what Bruce is telling us that the economy here in New York and the economy from a commercial real estate perspective, as well as a regular real estate perspective, is still very strong. And I think from my perspective, thinking about it from an alternative investment lens, you're hearing a lot about private credit and the hiccups that are happening there. But to me, this sounds like there's a lot of strength still in the real estate market in terms of alternative investments.
Well, I mean, what about that, Bruce? You've got all these worries about private credit. You've got, gates going up at certain alternative firms, and people can't get their money out because of the worries around private credit. How does that play into this?
I think that's a watch out. We're going to have to wait, watch, and see. I can tell you right now that from the perspective of who's investing in commercial real estate, it's the REIT, it's the institutional investors. Foreign investors are sitting on the sideline. That's something that I think we will see free up as we develop a little bit more insight into just where investors want to invest and how they want to invest. It's a highly bifurcated market, as I said before, but we are seeing investment take place.
All right. Well, we want to see some action, certainly, and activity, so that's good news. Bruce, good to see you. Thanks so much for weighing in on all of that.
Thank you, ma'am.
All right, Bruce Mosler joining us. Stay with us. We'll be right back. Talking China with Gordon Chang on the other side of this.